Sylvia, how's it going?
Oh, how's it going? How are you?
Oh, pretty good. It's an honor to have you on the show.
Oh, thanks.
I'm honestly
Thanks for
really
having
stoked about this just
me.
because
Oh, awesome.
I don't really interview many people on my show. My show is usually just me being a crackpot about my investment theories. So honestly, this is pretty much an honor in my opinion. So this is cool.
Oh, it's an honor for me too. We don't get to do like a ton of stuff like this too, and it's actually like the more I've been talking to guys like you, the more we kind of like learn about our products and like what people like about them, what they don't. We actually go back and when you deal with these large institutions, you very rarely get super constructive feedback, on products. And I've done like to the point that because of the YouTube stuff, we've launched the target income funds as a result of people just saying that they don't like the XYZ about the other ones. So yeah, it's like super helpful for us.
Heck yeah. No, I love I was actually looking at more of the ETFs you guys have launched, and I do see you guys do a lot of option based income ones, which I think are
Yeah.
pretty good to add to a portfolio. I think you should never concentrate your portfolio in too many of those, but you should have them in there. I think
Yeah.
during a bear market, it could be a nice little source of funding from time to time. If it's like a covered call one, for example, that's always good. But I know you guys do some put option ones, which is pretty interesting to me as well. And I'm like, yeah, it's pretty nice. I mean, I
Yeah.
but yeah. Anyway, tell us more about yourself. Like, why did you decide to become the CEO of Defiance ETFs?
Oh, yeah. Oh, well, I mean, no brainer, just absolute belief in what we were, doing, passion about ETFs and just, full kind of like partnership loyalty belief in the chairman and founder. So we worked together in a prior life. I actually started out like out of college. I worked on an equity derivatives trade swaps, trading desk, working with ETF issuers and hedge funds and swap products. And I ended up joining kind of one of the clients, which was direction ETFs. And I spent like a decade there doing everything, learning everything, capital markets, sales, research, just about anything, anything you can think of. And, at some point, Matt Belsky, who founded Defiance, worked for me on my team. And we spent 5 years kind of traveling the world, educating people about ETFs and how they work and all that. And, we just had a strong partnership, super smart guy. View life the same way and so it was just a no-brainer to join him and the rest of the team and to join the company and try to take a stab at it ourselves, right, after doing it for other people for years. So
I love it. That's incredible. I think the one thing I do appreciate about I'm trying to think real quick here about a company that wants to put out products that are more centered around the desire of their actual user base is
yeah.
pretty neat. I mean, I got to admit, like a lot of times, what was the old saying? Sometimes I think it was Henry Ford who said the customer doesn't know what they want, but then there's also people who believe that the customer does have an idea what they want, especially in the world of investing. Um, the only thing I've noticed about your guys' ETFs, and I will admit, like even for some of the more what feels like more of the index based ones as well, some of the expense ratios do feel a little bit higher than like say like some of the Vanguard ones, for instance, or is there any reason why some of like the more index based ones have a slightly higher or a higher expense ratio than some of the standard index ones?
Yeah, so actually our company has, different segments of ETFs, right? First we have a thematic suite of ETFs and we were first movers with like 5G and quantum. And the way we came to market with those is like we want to provide a product that's, the next generation of innovation of technology, of tech connectivity, which is, 6G, quantum computing, which is AI and machine learning. And the people who want to buy this are going to be more than likely kind of younger people, right? Maybe it's like a younger Gen X or millennial, Gen Z and below. Like this is the crowd that's really looking at this stuff and cares about stuff, and is excited about, everything from like climate change, hydrogen, Tesla, EV, AI, like all of it, right? And so we launched those products. They're the cheapest ones in the market right now. So 6G has a 30 basis point expense ratio. Most of our competitors are like 50% more, if not higher in that space. And we're also one of the top performing funds. So actually our thought was like, bring the coolest product that has, a massive potential to take off and make it super cheap so that it's accessible, right? And with those, we track a passive index and it rebalances, it rebalances a couple times a year. And so it's possible to have that at a lower fee. It doesn't, it doesn't matter to us to charge more because we can run it for what we're for less basically. With the index options funds, so this is like a very important intricacy. Those are actively managed funds that are somebody is sitting there every single day and trading finding the ODT option, 0 days to expiry option to basically sell to generate the most amount of income in that day. It's rebalanced every single day. The treasuries are purchased and traded. So it's very much like active portfolio management, and we have to pay for that. So it's not really index based in the sense that like the fund is just like if it was just SPY and it's tracking S&P 500, I mean, it can be free, right? Like Vanguard made them free.
Oh yeah.
And if not, they're like a couple bips from everyone, and that's fine. But for something like that, like we don't have anything that is simple and passive that is expensive.
Yeah.
All of the more complicated stuff is a little more expensive because we have to pay for, the portfolio management and the technology and all that stuff. So, and if you look at those products and compare them to competitors, we're like 100% right in line. People are charging 1% or more for almost all of those, actively managed income strategies out there. There are a few that are cheaper, but some of them are, but none of them are doing like a daily ODT put sell. So, it's a little more work.
I love it. I love it. That's incredible. That's something I didn't realize. And sometimes
Yeah.
you don't always. It's funny. Being someone like myself, I don't always know what goes on behind the scenes of a actively managed ETF, and it can be a little of a struggle sometimes to conceptualize. I think, just
Yeah.
because I'm so used to being such I guess you would say, just an isolated weirdo investor who just buys and holds things for long periods of
Yeah.
time, never sells. Um,
Yeah. I'm like that too, for what it's worth. So I appreciate the fee aspect of that. Right. So,
One
uh,
thing I do see ETFs as a way of outsourcing
yeah.
my outsourcing, because like I a lot of these strategies that you guys do, I don't think I'd want to take the time myself to do. So that's
Yeah.
why I consider it almost like hiring out those strategies, which is
Yeah.
why I'm totally fine paying those fees. There's especially for some of those options incomes one, because it's like I don't like I funny thing is I know how to write those. Like for instance, a cover call option, I could write a cover, I could buy the underlying shares as collateral, write the option, then sell the option to somebody out there and all that stuff. But like it does take a little, you have to have more capital allocated to the side to even do that sometimes. And it's just like it's more of a pain in the ass. So outsourcing in a lot of ways saves me time, and I don't mind. It's like the old cherry on top theory. As long as I'm getting the Sunday, I guess. I don't care I don't care who gets the cherry, I guess. But
Yeah, you make a great point. And actually, a lot of the users of the options funds, like the original zero DTE funds, not so much the target funds, but there are a lot of institutional, like large institutions called us and said, I literally do this strategy every day. And it's not the core of what I do. They're kind of like wealth managers that have their models that they allocate to. They're dealing with people's life insurance. They're, the checks that they need for their kids graduate, all that kind of stuff. They do everything, nuts and bolts. But they've said to me that like we really believe in selling these short-term options and capturing that theta decay. It's so juicy. I love doing this, but it's such a time suck, and I really just
yeah,
can't even like risk manage it myself. And so that's why I'm gonna, that's why I'm gonna use your ETF and just pay for it. Like even, large institutions do that too. And sometimes it doesn't make sense. And with products like the ODTE, it probably does. Yeah.
oh yeah, no, absolutely. One thing I want to say, I wanted to go over, and this is something a lot of viewers who watch my channel from time to time, they get pissed off at me about. I'm not
Mhm.
a fan of cryptocurrency. consistently do claim on my channel it's a Ponzi scheme. I really firmly believe it. Now, I do think crypto in itself, the software is really cool. I just
Mhm.
believe that it has no real basis based value like ever. I have a feeling you may disagree with me because I know a lot of like I said, I love the software, but I just don't think that anything that can't be backed by anything of true natural value, it bugs me a little bit. So this is a question I did want to ask. So what do you convince me that cryptocurrency in itself is not a Ponzi scheme to the best of your ability. It's okay, and it's okay. uh,
Yeah, so I actually just given like my role, I can't actually convince you of anything like that. It's kind of like I could tell you about it, and I could tell you what I think about it. I can't really convince you to change your mind, but I think like here's my take on crypto, right? I'll give you like my parting words on that. I think that whether or not you believe in crypto, there are billions of dollars flowing into crypto, and as a trader, when you see you know, you have blockchain technology, you have Bitcoin on that technology, you see the amount of volume and flows going into that. You see all these ETFs coming out, which increase the prices, increase the flows, both in Bitcoin and Ether. I think as a trader, whether you like it or not, you can make the case that it's interesting to look at and interesting to trade based simply on, momentum, popularity. And I think some people trade it for that reason that they don't necessarily believe or understand. And then there are others out there that believe that it is, a store. It is a store of value. It's the technology is going to change. The technology behind it's going to change the world. It's the future of how we're going to interact in society. They believe the prices will go to $100,000 for XYZ reason. And so I think, with crypto, it's up to you. If you don't like it, stay away from it. If you like it, you have a whole lot of ways to trade it. And actually, the ETF kind of puts safety into it, right? Because now it's an exchange listed product that's regulated. And, you were talking about Ponzi scheme, right? So the regulators actually have to now monitor what's happening with these ETFs and what's happening with the underlying, and whether or not it's trading at or near its NAV, whether or not it's meeting its targeted objective and stuff like that. So in a way, having the ETFs actually makes it less likely to be, Ponzi schemed
yeah.
for an investor, if that makes sense. There's no
No,
like wallet that can go away from you if you hold the ETF, for example. So I would say that if you like crypto, I like the ETF format. I'll answer it that way. But yeah, I mean, we've obviously looked at in the past, like we're very interested in crypto. We think it's very interesting, but I think we also think it's interesting from a technology standpoint. So I'll agree with you there. I think blockchain technology has, so much potential if it ever comes to fruition, just like I don't know. I often think about this, right? Like if you think about like the life of the trade and how many you have like a salesperson that maybe talks to a client and then a trader who executes it and then a middle office person who does something and a back office person who does something and an FX team who has to settle it. Like you have to think that that could be like a contract with, like a blockchain technology, like a contract on a blockchain that kind of goes through its steps and becomes, executed with less human error. So I see the value of that stuff for sure in the future, but we're not there yet, obviously.
and that's the one thing I like about it. Like I actually think the underlying software is brilliant.
Yeah.
I've just never seen it as a store of value. I do transparent to everybody here. I actually got into Bitcoin fairly early. I never sold it, but I decided to bet against my underlying position just because I was like, well, I got nothing to lose except for any time it, so I never
Yeah.
sold it. And it's odd because I will constantly act like a hedge fund on certain things. And how I bet against it's honestly is I just use the BITI ETF, where it's like
Yeah, but
it's
but
like
see there you go. You don't have to believe in this thing to be a trader and get something out of it, right? So like it's there's different ways to yeah to think about trading Bitcoin and what it means to you.
Yeah, and the ups and downs fund my portfolio anyway. Like I said, I'm a long-term old man boring investor for the most part, but no,
Yeah.
I appreciate your insight on crypto, and I always do try to. I like it when I do like to try to keep the most open mind I can, even if I do have strong opinions on certain things. I'm not gonna lie,
Yeah.
but no, thank you for your insight on that one. That was cool. That actually means a lot to me. It's very honest and and actually that, because the underlying technology itself, I would love to see, because the decentralized nature of cryptocurrency is what I
Yeah.
like about it. I do like that aspect of it. That is very appealing. I think it would be it almost kind of reminds me of and this might be an inaccurate comparison. It almost reminds me of like kind of like, well, no, it is different than the BitTorrent protocol overall. I guess it might be kind of the same, but like BitTorrent back in the day, it always kind of reminded me of that, how like BitTorrent was a set decentralized file sharing platform in a lot of ways, and
Yeah.
how like Bitcoin and all the cryptocurrencies are. I don't know if it was ever modeled after BitTorrent, but that would be hilarious if it was, because but yeah, I'm trying to think of. I'm just kind of looking at some of my notes here of just certain questions I want to ask, just because I find I've actually watched some of your CNBC interviews and
Yeah.
like Fox Business, a couple ones there, and I was just so curious about. Let's see, because I'm trying to remember some of the questions I had kind of kind of noted down a little bit. How do you select? Because I know some of them are very thematic
Yeah.
ETFs that you have. So you do choose based off the user for the most part, but do you guys ever put in your own? Because you guys are the experts in this, so it's like, do you guys? How much of it is your own input, and how much of it is
Yeah.
user input? Is it kind of like a trade off, like 30% of your guys' belief versus 60% of your users' belief, and how you guys theme the ETF? Like, what would you say?
Yeah, so we get, you know, themes become viral now on social media, right? So we actually have a marketing analytics company, and we do marketing analytics for ourselves and even for other companies too. It's like one thing we're very good at. We literally scour everything, like everything you guys are saying, everything that's, going on Reddit, on X, on soundboards, good, bad, whatever people are talking about us or just the markets and things like that. And we kind of start to see that, for example, like options income became a big theme, and like many groups of YouTubers start talking about this, and it's become, it becomes like their X spaces and YouTube video, and then there's all this kind of like notes and media around it. And we start seeing the AUM flow in, and then we think to ourselves like, okay, we should play in this space. But so for something like 5G, right? The word 5G was being thrown around in 2018. It's the next level of communication, lower latency. In order for anything in the world to happen, driverless cars, connected cities, things like this, we need 5G. And there was no, there were communications ETFs, there are semiconductor ETFs, there are mixes of that, but there was no actual just like straight teleconnectivity ETF. And by the way, we recently changed to 6G because we now think that 6G is actually going to be the next thing that you need in order for all this stuff to work. But so we know now, like, okay, so 5G is a theme, and there should be an ETF that represents that well. And so we have our own ideas about like what represents 5G. But when you launch or launch an ETF, you kind of have to like get permission, or you have to file your idea with the regulators, with the SEC. And so they require that if you are calling something a 6G ETF, right, or a quantum ETF, you have to like prove it basically. And so what we do is we come up with the idea, or we get the idea from whomever, clients, influencers, whatever it might be, and we kind of like start digging into it, and we work with index providers, and they have their own team of like PhDs and quants and engineers, and we can say to them, are there, how do we build this, and what should we look at? And then they'll say like, okay, these are like the 16 areas that are relevant to 6G. And then we start looking into it like, okay, which stocks do people actually care about trading? Which ones have the best, fundamentals? Which ones are liquid enough? Which ones actually get, a reasonable enough portion of their revenues from the thing we're saying we're doing, right? And so, and the SEC kind of just, formalized that. They have a names rule where, if you call your ETF 6G, we have to sort of state like we're looking at companies that generate 50% or more of their revenues in things like telecommunications, core carrier services, REITs, the cell towers, semiconductors that actually, run data centers and clouds and things like this. And so it's very much collaborated with an index provider that has hundreds of years of data, engineers, wizards, that kind of thing. Our own ideas, and then the feedback we get from people. So it's not like I couldn't say 50-50. I think it's just like so much information goes into, because when you're a startup, it's hard to launch an ETF. It's expensive. If you're wrong, you like really burn, you burn through your balance sheet, you miss another opportunity. Like it really matters for a small company. You have to be right, and you're just not right. Like if I think, our hit rate about things that have like really just taken off is higher than 50%, which is like awesome, right? But but it's also, you certainly eat your losses. So there's a lot that goes into researching and creating ETFs. Whereas if you're a bigger ETF company, of course it matters. You don't want to launch funds that don't do well, but you can kind of like, it's not going to impact your balance sheet. You're going to move on and go on to the next thing. Like for us, we think deeply, deeply and work very hard on every idea that comes out to market.
I love it. No, that's
Yeah.
so cool. I just love
Yeah.
hearing this. I love diving into your mind on this one because on all these things, and to hear your guys' process of creating the themes of the ETF and the
Yeah.
process that goes into it. Honestly, bravo. Seriously, bravo. The
Yeah, thank you. And you know what? And we get criticized for this quite a lot. But we are quick to also like announce and admit our failures. So like when we have had a great idea and just, fully believed in it and did all of this research and it turns out the timing wasn't right, or maybe people wanted it with a different special sauce than we had, or what, for whatever reason, the ETF doesn't take off, nobody trades it. Like we're quick to close it. And the reason we close it is there's no interest. It's not benefiting, it's not benefiting anyone if nobody's using it, right? And it doesn't make sense for us to run a product that nobody cares about. And I think, I actually believe that um it's good to, put everything into it, but also, own your wins and own your losses. And we, very much do that. So
No, absolutely. I do have one proposal. I wanted to
yeah.
propose at
Okay.
least one potential ETF.
Okay.
It's a very basic idea. I want to just throw it out there. It's a covered call ETF.
Okay.
But there's one I haven't seen, and I maybe have overlooked it out there. But I want to see. So yeah, like like the Vanguard Total World Index, for example, or ETF, or it's basically like, oh, I don't know, 60% total U.S. stocks,
Yeah.
40% international. Have you guys thought about doing like and we're going not just the total stock market. I want to go like more Ray Dalio style, the all weather portfolio theory. Have you guys ever thought about doing a covered call option strategy on an all weather themed portfolio?
So we have thought about it, and there's a lot of whiteboarding going on in terms of like what that should look like. Should it be a target? Should it be a daily options thing? Should it be, what would be in it? But yeah, I mean, I know that and I know are my competitors for sure because I just see the filings coming out every day. But yeah, it's definitely something that we all talk about. Yeah,
And the reason I suggest is because I feel like there's such a lack of volatility, and that if you were to write options against a lot of because the whole idea is just like being diversified across all asset classes, and
yeah.
then once you're diversified across all asset classes, you could use whatever the hell you have as the collateral to maybe write those options, or hell even do I don't know put options against it. Yeah, I guess you could technically do that. I'm trying to
You
think
could
if that
sell
would be a
credit
good idea.
spreads. You could sell credit spreads. You could do like
Mm,
a covered call, sell a covered call short term and then buy one, and then sorry, and then have a longer dated one and sell the credit spread. You could do that.
I like that. That'd be kind of cool.
Yeah. Yeah.
That'd be
Yeah,
neat.
we actually do that on our target income funds and it works out super well. So you can kind of target an annual distribution and but you pick up the upside, right? Because you're unlocking the covered call by, having that longer dated one in there too. But yeah, you could do something like that too. And I think like the ODTE thing, like the short, the 0 day to expiry or like 1 day to expiry, or even like the weeklies, like those exist already on those indices. So you could even do it that way and sell those puts, those short-term puts. The
Oh
only
yeah.
problem with that is you get more juice for sure. You get more income. You get a
Mm.
little bit less upside on the index.
Oh,
So
okay.
those are kind of like the two ways to do it.
I'm just juggling that in my head real quick. Just kind
Yeah, because the
of.
put is going to be capped. If you're selling the put, it's going to be capped at the strike, right? So, and that's usually like 1 to 2% from where the index is. So you probably you're going to capture like a small percentage of the upside every day, but you're going to get this massive premium because it's, it's like theta decay, right? It's like super powered decay premium basically, and it settles to cash. So you get these big, so that's that's kind of the difference, I guess, between the two. You can get really big, juicy income divs with the short term put selling, and with the cover call, kind of longer term, you might get a little more upside though.
Yeah.
Less income, more upside, I would say, is what we've seen. But
Damn, those projections are freaking interesting. One other thing I'm curious about, have you guys ever thought about doing oh, where, because I know you guys do actively manage with humans, but have you
yeah,
guys ever thought about doing full AI actively managed? I don't know if that's even legal, to be quite frank. I don't know if the SEC
we're
allows
doing
that
it.
sort.
Yeah. There are a lot of advisors that are now running their portfolios that way. We don't do it. We still think that, human intervention because especially with like zero data expiry puts, right? Like that's such a manual thing. It's actually not like it's not really fully model driven yet. It's a newer thing. You really have to like make sure you're, kind of managing it well and this and that. I mean, eventually all this stuff can be automated, I'm sure. But in terms of, we use well, I'm like at a loss for words, like language model processing, basically. Like whenever we try to build an ETF, for example, and like ChatGPT even does this right now. Like if you said to ChatGPT, like pull up, and we didn't have it when we built 5G, just to be, we built it like in 2018, so we didn't use that. But these natural language processing models, you can plug in like find me every single security in every single market in the world that generates a high percentage of whatever, 20% or more of their revenues from telecom or from, data center or something like
Mhm.
this. And so AI is wildly helpful with R&D, but it doesn't replace us just yet. Yeah.
and I wasn't even really thinking of as a replacement. I was thinking of just kind of alongside
Oh
you
no,
guys,
totally. Yeah.
like a
Yeah.
side thing, like for people who, because I think it would, well, I don't know if it would technically lower the expense ratio for some of them, but for some people who are expense ratio conscious,
Yeah.
I think having an AI that manages a fund of some kind, even if it's not options trading, for example, maybe if it's just, I don't know, swing trading or something like that, like a swing trading ETF. I'm throwing rando ideas out a little bit, but
Yeah.
I don't know. It'd just be cool to see. I don't know. I'm pretty sure there are some
There's one
ETFs
out
out
there.
there
Yeah, there is
that
for
do it already.
sure. I think it's Craft, like Craft. It's a good friend of mine. Actually, we used to work together at Direction. He's in South Korea, and they do that. They're like 100% AI driven. They have an ETF, and they're, that's what they're doing. Like hands off, let the models run. And yeah, I don't know that anyone has like a pure AI in the US. I mean, most of the ETFs launched these days are like screened and vetted through AI, right? But um, yeah, no, it's interesting. It's interesting.
Let's see here. Actually, just curious. I know I've asked you a million questions. You got any questions for me at all that you think off the top of your head? Anything that you want to hear from me specifically?
Yeah, I'd love to hear like what is your view on, last couple of days been pretty rough, and you're a buy and hold guy. Like how do you kind of manage that, and think about your not touch your portfolio, not go crazy? How do you diversify your side? Just be curious about how you think about things, well,
I believe.
specifically as they relate to like this week.
Well, I guess one, I believe cash is valueless
Yeah,
naturally because it's not backed by anything of real substance. So I'm always happy to trade my cash for any assets.
sounds kind of like
Um,
Bitcoin.
huh?
Sorry, I said sounds kind of like Bitcoin.
Uh,
No, I'm
oh,
kidding. I'm kidding.
no, no. But I will say
Kidding.
though, and like cash is important. Obviously, we all use
Yeah,
cash every day. I'm
yeah,
not saying like I have $0 in my bank account. That would be idiotic for me to do that.
right.
But I do believe that I guess my trust in the dollar is very low.
Okay.
Um, a trust in any currency, to be honest, is very low, no matter what it is. Um, but I do believe that, though, I believe in the concept of save your assets, not your money. So even if the prices fluctuate on my
I like that.
assets,
I
I
like
know
that. Yeah.
I know that the underlying asset itself is still valuable.
Yeah.
Just because I don't really care what the market says, to be honest. I always use the old saying, the market's a liar until it's not. But, what I
Right.
really care about is like how well the company's managed. Are the earnings good? Even if the companies that I invest in end up being mediocre, I'm fine with it as long as they're cash flowing. I don't ever really sell. Like, it's very rare that I sell. I swing trade. The closest thing I do is swing trading is the BITI. But like I said, that's just because I'm just swing trading
Having
against
fun with
my
it.
underlying Bitcoin.
Yeah.
Um, but other than that, though, buy and hold, I have lots of different ETFs in my portfolio. I have a one on, what's the term? In everything on the menu theory. So
Yeah.
I just want one of everything on the menu that you give me. So there's a lot of different ETFs that invested in, whether it's covered call, whether it's, put based options, ETFs, whether it's standard index ones, whether it's just single stocks. My portfolio remains as diversified as possible. My goal is to always be getting paid from
Yeah.
my portfolio through dividend payouts. I love that, whether it's a simple payout from Coca-Cola or whether it's a payout from like one of your guys's ETFs, which I actually think I own. Last time I checked in my portfolio, I know I own about, I think, three of them, and I can't remember which ones they were. I think it was the one of them was like the just for full transparency for my audience, because I know I have like Russell. It was one of the Russell 2000 option ones,
Oh,
and then
IWY.
yeah, I would think
Yeah.
that was the
Yeah.
one. But
Yeah.
I'm terrible at remembering half some of those ETFs that I get into because I have so many damn ETFs in my portfolio. It's insane. But yeah, overall, my investment strategy is remain as diversified as possible. The future is uncertain.
Yeah.
We're all so the thing is, I don't believe I so Charlie Munger once said that diversification is a protection against ignorance. Even Charlie Munger, I believe, though, is ignorant to the future.
Yes.
And the one thing you have to do is spread your risk as wholly as you can. Because I think John D. Rockefeller, if I remember right, pretty much spread his risk around as much as he could back in the day with any assets and investments he had. Um, so I spread my risk. I never sell. I'm always in the market to buy. Preferably in bear markets. I actually increase my buying in bear markets. I prefer them because I know that I'm getting things
Deal.
on
Yeah.
sale.
Same. Same. I do the same.
And
Yeah.
I wish, the one thing I hate, and I hate's a strong word, I know, but like I hate the fact that a lot of like CNBC and Fox Business and all those financial things entities try to make investors look at investing through the eyes of a gambler and not in a long-term investor. I think there's too many people trying to gamble the market instead of trying to be in it just to
Yeah.
be in it for the long term. So
Yeah, totally.
that's my
For what it's
take.
worth, I try to say that as much as possible. I like, particularly when I go and see CNBC and stuff, like I'll talk about, kind of like my short-term views and what are, what I'm buying and what I'm looking at and stuff like that. But I always say, or just, my belief system in AI and that it's a great opportunity for the future, all this kind of stuff that, I believe. But I also say that like, I don't use the words I don't care, but I think I have kind of your opinion that in the end, like I'm in it until the end. So I hate looking at my account yesterday. Like, it's terrible, right? If you're down a lot and the market's down a lot or whatever the day before. But then, today it looks just fine. Like, so you kind of like learn this as you spend more time investing and trying to build your wealth. Like, it just doesn't matter. It's noise, right? If you're a long-term holder, you're dollar cost averaging in, you keep, kind of set it and forget it forever. If you don't need that money to live off of, like, you're very likely to do very, very well, right? Um, and so regardless of what happens day to day, when you get pullbacks, like those are awesome opportunities to add to your acorns.
I did realize something. I am a little bit of an idiot. I realized I didn't actually have. This is embarrassing to admit. I don't have the pro version of Zoom, so we only got like 5 minutes and 30
Oh,
seconds.
yeah,
Are
no
you okay
worries.
with that? I'm so
Yeah,
sorry about
yeah,
that.
yeah. No, no, no. Yeah, yeah, yeah. No, I'm
I
good.
feel like a total fool. But yeah. So we got so I want to hear just anything you want to say, just anything that you feel like you want to get out there to any audience listening, whether it's a new audience, whether it's anybody
Yeah.
maybe who's never heard of you. Like, what do you want them to know about you guys? Because I think you guys are pretty cool. Like, I actually do
Thank
like what you
you.
guys do. I
Yeah.
That's one of the
Yeah.
reasons why I was so willing to, first off, I've never spoken to a CEO before. That's kind of cool. Except for one of the companies I worked at previously, but like that was like back in the day. Anyway, but this is neat. So what would you say to anybody out there just about you guys? Like,
Yes.
why should they get in?
So about us, like, and you mentioned CEO, like I could care, like, I'm proud of being a leader and senior person of this firm. The chairman is very proud, obviously very proud, blood, sweat, and tears going to this every day for us. It's our passion, it's our baby. Like we care so much about this. Everything that we build is thoughtful and kind of like with good intention. And we actually are, I think we're kind of like old enough where we've done this for long enough, but we're young enough where we're still in the social media mix and like, like very interested in with like what super young people think, everyone from like the seasoned institutional guy who's about to retire to, my 20-year-old nephew who's so excited because he got to buy Nvidia after the stocks. But we want to hear from everyone. So I would say to like everyone out there, if you're interested in an ETF, have an open mind if it's new. Just because it's not huge doesn't mean it's not good, right? I think, do your research and you can always actually reach out to the ETF companies. Like you can reach out to us, you can DM me on any of the social media platforms, you can reach out via our website. We have a contact us number, and like every ETF company, no matter how big or small, should, be willing to like help and answer questions and stuff like that. So then I think when you go into your investment, you feel good because you got the information from the horse's mouth. And yeah, and we love feedback is great. But yeah, I mean, our goal is to just continue to come up with what, good products, knock on wood, that appreciate, do well for people, whether they um, take the dividends and earn income, or whether they're participating in 5G, 6G, AI, machine learning. Like we do our best to come out with cool products. So
I love it. I love it. I think you guys are offering, so honestly, by the looks of it, something very unique and something very effective. I mean, I honestly do think some of your guys' strategies, well, I got to admit, sometimes there are some strategies that are a little over my head, but I think that it's only because like I'm just not as experienced with certain things, and oh man, it's just I don't know. I want to. I do. I'm sorry. I'm a loss for words today, to be honest. Maybe not enough coffee or anything like that. But
it's Friday morning, all good. It happens.
I think to my audience and everybody out there, these are some, I'm not gonna I don't promote products or anything like that, but it's always something, talk to a financial advisor out there, you guys, because I think
Yeah.
that they would probably look at these and be like, these are actually something to consider adding. At least that's what I would think they'd want to say. I mean, me personally,
Yeah.
because especially if you want to add that diversification, I think that diversification is important not only of assets, but I think of strategies. I think
Yes.
and so being able to have your guys' ETFs in my portfolio, for instance, allows me to use you basically to hire you guys in a lot of ways. That's how I look at it. Me mentally, I know it's not, well, I guess it technically is, but I don't know. I always
Yeah,
consider
that
it. I'm
actually is an
like,
awesome way to look at it. You could easily hire and fire people using
yeah,
ETFs, right?
yeah, and it's just like because there's so many interesting strategies out there that I think are effective that, like I said, I don't have the time to implement it, or maybe I don't have the know-how to implement it, but it seems like something you know, in my head might actually be a good idea. I might as well see what I could do. Like I buy about a share of just about everything. So like and that's especially if I like it. Well, I will say I wouldn't say everything, but anything I like, I will at least buy a share of and
Yeah,
just add it to my portfolio just to have the exposure. The goal is to be exposed to as many different things as possible, in my opinion, at least. So
yeah. Cool. Cool.
but Sylvia, honestly, we only got about a minute left. I honestly, it's been a pleasure to have you. I'm going to try to upload this as soon as possible.
Yeah, thanks for having me.
Thanks for even coming on my crazy crackpot show. I just
Oh,
want to say
of
that.
course, of course. Anytime, anytime. Anytime. And it's not crazy. I think you're putting good information out there. And I think that like, just over the last year or two, the growth in, you know, kind of influencing, financial influencing, it's just, it's so helpful that, you know, people like you are out there speaking in things in digestible ways and helping, I think, really like novice investors that maybe don't watch the big networks, as you said, or maybe aren't getting their news from the Wall Street Journal. Like, you're really helping people figure out how to manage their wealth